Halliday presents, in the red corner, the undisputed, undefeated Weed Whacker Guy. Champion of hurling grass and pollen everywhere. And in the blue corner, the challenger, extra strength Halliday. Eye drops that work all day to prevent the release of histamines that cause itchy allergy eyes. And the winner by knockout is Halliday. Halliday, bring it on.
Reality radio for a really great future. We're talking real money.
Well, I decided to do something a little different to end the week, to end this Friday. I discovered a number of really interesting dissertations by Professor Kenneth French from Dartmouth. We talked about some of his ideas yesterday on the podcast, and I went looking around and found really interesting bits that Professor French recorded on various aspects of investing. And they're so insightful, and they're so sensible, and they provide a different perspective on the same kinds of things we talk about. So over the next few weeks, we're going to have French Fridays. If you want to go pick up some fries while you're out, driving around and listening, sure, you can have a French fry and listen to Ken French. So let's see. This week, Professor French is talking about market timing. Now, we talk about market timing all the time. We do not like it. But Professor French has a fascinating analogy in which he really does make the point that market timing is gambling. In essence, it's gambling. And gambling, that's hard to do well. It really is. Some do, but it's hard. It's harder than actually working for a living. So on these French Fridays, we're going to have a few words from Ken French for as long as the audio lasts. Now, bear in mind, these come from Dimensional Funds. And Professor French is a director for Dimensional Funds. But for some reason, Dimensional Funds loves adding a music soundtrack underneath the spoken audio, which drives me crazy. But you get a little musical interlude on your Friday because I could not figure out a way to take it out in post-production. So without further ado, on our first French Friday, here is Dartmouth professor Kenneth French.
Most people who try to time the market, increasing their exposure when they think the market's going to do well, reducing their exposure when they think the market's going to do poorly, are just fooling themselves. They don't actually have the ability to forecast the market. People are often confused about what it takes to succeed as a market timer. Suppose I'm trying to make money by betting on football. If I study everything I can find about the sport, the players, the coaches, weather forecasts, even the refs, I can probably identify a few games each week where I'm pretty sure about which team is more likely to win. But that's not enough for me to make money. I don't make money by just betting on some favorites. I make money by beating the spread. The spread essentially levels the field, taking away the favorite's advantage by giving the underdog extra points. Bookies set the spread so there's an equal amount bet on each team. To make money, I have to know when the spread is wrong. Betting on the underdog when the market has overestimated the favorite's advantage, and betting on the favorite when the market has underestimated its advantage. This is much harder for me to do than just identifying the favorite. Timing the market works the same way. It's not good enough to correctly forecast that the economy will expand or that we're going into a recession. Just like the bookies spread, stock prices incorporate the aggregate forecast of all other investors. To win, I have to figure out what that forecast is and whether the forecast is too high or too low. It's me against the classic wisdom of crowds. Just like when I'm betting on football, I don't win just by identifying the favorite, predicting whether the economy will expand or contract. I have to figure out whether the forecast in stock prices is too optimistic or too pessimistic. And to make the problem even harder, no one tells me what forecast the market has priced in. When I'm betting, I know exactly the spread I'm betting against. In the stock market, I'm guessing what the spread is. Like the bookies cut in the betting market, market timers have to cover at least 3 costs before they make money. First, despite the fierce competition among brokerage firms, we know it's not actually free to trade in and out of the market. Second, even unsuccessful market timing is likely to increase expected taxes. Third, market timing can consume lots of time and energy. And there's another problem. Market timers who don't really have skill are just screwing up their portfolio. Suppose your ideal portfolio is 60% stocks, 40% bonds. When you try to time the market without any real insights, you're just moving away from that portfolio. In other words, most investors shouldn't try to time the market. When they do, they're simply spending resources to move away from a better portfolio.
Just like betting on football games, you can't win. I mean, you might win. But people who bet on football games know it's a game of chance where they're trying to make some educated guesses, but they're making those guesses against hundreds of thousands or millions of people, just like you are with the stock market. It can't be done, and it's not worth pursuing. It really isn't, for a number of reasons, many of which he elucidated in that piece. So I hope you enjoyed our first edition of French Friday. If you have questions, we'll be live on the radio tomorrow on KOMO Radio in Seattle from 3 until 5 p.m. Eastern at 855-935-TALK, 855-935-8255. You can send questions into that number 24/7. Call them in, leave your question. Or you can go to TalkingRealMoney.com, hit the contact form, and either type up your question or record it from your computer. And if you are trying to get a plan, you're trying to get rid of that hodgepodge portfolio that you have, you've realized that you can't market time, that nobody can predict the future, well, we want to help you. And what we do want to help you and have you hire us. That would be great. That would be wonderful. We're a 100% fiduciary investment advisory firm and money management firm. But we also help everybody, whether they plan to ever become a client or not. Because we want to make sure everybody gets the right start, and it's so hard to find somebody who's trustworthy. So set up an appointment with one of our advisors. I promise you, no high-pressure sales pitch, no obligation. Just go to vestory.com, vestory.com. Take a look at the website, scroll down to the bottom of the page, set up an appointment anytime, and we'll make sure we get one of our advisors to spend some time with you. Not all day, less than an hour, but hey, it's free. It's a good deal. Thanks for listening. I hope you enjoyed this. We'll talk to you again. Well, we have podcasts pretty much every day, so just keep checking back. And if you get a chance, call us, 855-935-TALK. I'm Don McDonald.
Talking real money. We hope you realize that the information provided on Talking Real Money is for educational and hopefully enjoyable purposes only. Providing personalized financial planning or investing advice takes time, so please consult with a really good fee-only fiduciary investment, tax, or legal advisor. We know a good one. Investing must always involve risk. In other words, you can and probably will lose money at times. Also, as much as you want it, no one can accurately and consistently predict the future. So past performance doesn't tell you a darn thing about what the future will bring. Unlike many other programs that say something similar, Talking Real Money is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Vestory, a fee-only registered investment advisor. Thanks for listening, and please visit TalkingRealMoney.com for more information and disclosures. That should keep the lawyers happy.